Hello, folks. It is Saturday, September 14. It's about 4 o'clock in the afternoon on the west coast of the United States. In this video, we'll be looking at West Red Lake gold mines. That's a mouthful. This is a gold stock that Bob mentioned in a video that he did on I believe it was the 10th of September. It's posted on his website. Let me share my video or share my screen here and we'll get going. Here we go. West Red Lake Gold Mines is their full name. Here's the interview posted on Bob's site, 321 Gold. They're talking, or obviously the topic is about gold miner undervaluations. And excuse me, the interviewer asked Bob to, everybody's trying to pick Bob's brains. It's like, what stock should I buy? And so he was not giving a recommendation, and I'm not giving a recommendation, but this was the Red Lake Gold Mines. That was the only stock that Bob mentioned in this interview. And so I decided to take a look at it, and I'm sharing the results of that, what I found with you. And this is not this is what I expected to see. I put together these slides because I wanted to do a synopsis or an executive summary of the highlights that I found. Spent several hours going through their website, looking at their presentation, their news releases, etc. And so anyway, this is an emerging producer about to head into production. They're targeting second half of 2025, fully permitted. They bought a mine and a mill for about 10 cents on the dollar. Best as I can tell, they picked up a mine and mill that had $350 million Canadian worth of investment and development, recent investment and development, and they paid, like I said, about 10 cents on the dollar for it. Since they purchased the mine and mill, they've done additional drilling, exploration, etc., and investment in the processing plant. So they're into this property and mill for more than 30 million at this point, but they got a deal. They got a deal. The mine and the mill had been in production previously and recently, 2020 to 2022. The mine and mill was in production with the previous owner. And I didn't dig into the story, so I can't tell you how West Red Lake Gold Mines got this deal, but anyway, they did. Significantly de-risked. It's been a producer and a recent producer, so a lot of de-risking has already occurred. They have high grade drill results both at shallow depth and at deep depth. And so we'll see that. Got some of the big boys in the neighborhood, and they're drilling and producing gold from deep, from 3,000 meters. And West Red Lake Gold Mines, I have to come up with an acronym, WRLG. There it is, WRLG. Currently, they're developed down to 1,300 meters. And so, that's 2,000 meters of potential growth of their resources. They've done some drilling down deep. They're drilling down at least as deep as 750 meters. That's their 8 zone, and finding high grade drill result. High grade at those depths. And as we'll see in their investor presentation, they're looking at this 8 zone as a potential. They're thinking this may be a big deal, and we'll see that as we go forward. Let's see. They have 100% owned property that's nearby. It's less than 20 kilometers, so 12 miles, which is a reasonable distance to drill or mine mine ore at their existing 100% property, and then, haul it in haul trucks, haul it over to the processing plant. And so this is additional resources that they can take advantage of. So not only the Madsen mine, that's where the processing plant is located, but they have an additional property with resources. These nearby resources have their past producers as well, historic past. I think one of them goes back into the 1920s, but they have a technical report on it's the Rowan property, I believe. And in that report, they have 195,000 ounces of indicated resources. So at the Madsen mine, they've got it's almost 1.7 million ounces of indicated resources and further inferred resources. So anyway, I mean, that's already several juicy highlights. A producing mine and mill, they got it cheap. They got 1,000,006 ounces of indicated resources, targeting production in second half of 2025. Infrastructure's in place, water, power, highways, people, they're in a good location. Current valuation, and we'll see this in their presentations, currently being valued as a developer, not a junior explorer, but a developer. Whereas based on just the highlights I've shared with you so far, I would describe this company as an emerging producer, and I would value it as an emerging producer, not a developer. And so that we'll see that when we get to this slide 22, that currently undervalued from that perspective. So yeah, 1.65 million. That's the nearby property. This is interesting. So, and we'll see this going forward. They're able to obtain financing based on their future production. Because, again, they're near-term producer, an emerging producer. And so instead of selling shares, which, dilutes the value of the existing shares, or going into debt, taking on debt, company's currently debt-free, they're able to obtain financing based on future production. And so that's kind of a interesting twist on this particular company. They're learning from the past operators' mistakes. And again, I don't know what the full story, I don't know what any of the story is on the last operator. What we'll see in one of or two of their news releases, they're going through and they're cleaning up the mill, getting ready to go into production, and they're recovering gold ore that got basically stuck in different points in the processing plant. And they're going in and cleaning up that gold and recovering it and learning, okay, what were they doing wrong? Let's not do that. and that's in my book, that's an indication of intelligence, is when you're able to learn from somebody else's mistakes instead of your own. So here's the location. This is this nice map. So this is the Madsen mine and mill. This is basically where the mill is located. This is the nearby property. These are three past producing mines, 10-kilometer scale there. You can see at the bottom of the map. So that's, roughly 20 kilometers, no more than 20 kilometers, which again is 12 miles or so. The district, high grade, significant depth extent. Again, Goldcore, I believe, is one of the mining companies in this neighborhood, and they're currently mining at 3,000 meters. And you can see here some of the big boys that are operating in the same neighborhood. Let's see, there's the timeline. So yeah, 350 million invested in the past. They picked it up for here it is. Oh, 42 million. So they paid, it was a little bit more than 10 cents on the dollar, but not much. That's not even 15 cents on the dollar. So anyway, however they did it, they got a good deal on this property. Let's see. That's a repeat of there, more of the same. So that's a picture of there's the head frame of the shaft, which I believe is 1,200 meters, almost 1,300 meters, processing plant. They're building, that looks like some of it's already in place. They're building facilities for miners who don't live in the nearby town of Red Lake. And population 5,000, I believe, in Red Lake. So they're able to tap those people as resources. And then people that they bring in from outside, they'll have nice new facilities where they will be able to stay. Underground equipment. This is a picture of the ball mill, obviously, currently at 800 tons per day, easily expandable we'll see in their presentation. They're saying that easily expandable to almost double that. So potential there to expand the processing facility fairly easily. Tailings facility, one of the projects they're currently doing is they're increasing the height of the dam that holds the tailing facility in, and with the increased height, they're projecting a 10 years worth of tailings that they'll be able to handle. Yeah, 1,275 meter deep shaft, water treatment plant in place. Oh, yeah, and a new, not only a recent production, but a new mill. So 2020. So whoever built this thing, they must have gone bankrupt or couldn't continue for some reason. Anyway, new mine and mill. The 800 tons permit. So currently only permitted to 1089, but potentially expandable up to 1,500. So can expand a little bit with existing permits and then go beyond that. They'd have to go back and get new permits, obviously, or amended permits. 95% gold recovery from their processing flow is good. That's good recovery. Let's see. I found this interesting. So currently what they're doing is tight spaced definition drilling. They're going from 20 meters, that was the previous spacing, and they're taking it down to 6 meters. And note the point that they've got in italics here. Before they go design their stopes, their mining plan, they're doing this dense definition drilling. And one of the things, I'm not a geologist, and my level of knowledge about the operations of a mine, shallow, but I'm sharing with you what I know. So in high grade ore, you get a fairly thin vein of high grade ore, and then rock. And so one of the ways you increase the efficiency of your overall mining process is to focus on that high grade and minimize the low grade ore, basically just rock. There's no point running rock through your processing plant if you don't have to. And so that's one of the things they're doing with this high dense definition drilling. That's what they're saying here. And then test mining. This is another point in their favor. Because this is a historic mine, they've got a a mix of conditions to deal with. It's not virgin rock, if you will. It's been drilled in the past. Some of the historic stopes have been filled, infill, and so that's a different condition. Calls for a different technique to go in and drill into a stope that has infill in it. So they're doing test mining, again, maximizing efficiency, overall efficiency. Let's see, high, and that's what they're saying here. High grade and pervasive, but not always continuous. You don't get a whole bunch of high grade ore, and it just goes and goes and goes. You get some high grade and then some rock and then some high grade but they're dealing with that. It appears that they're dealing with that in an intelligent manner. They're leveraging the workflow that the previous operator had in place, and as I stated, they're learning from past mistakes and fixing those mistakes. Let's see. I think we can skip through these slides showing drill results. This is a significant upgrade that they're currently working on, shown in green here. They're connecting they've got two existing portals on the mine, east and west. In the past, currently, they were unconnected, and that's what they're working on currently, is they're connecting those two portals. It's going to increase the size of trucks that they'll be able to get down into. This is the area that they're targeting currently for production. And so they'll be able to get larger haul trucks down into this area with this new portal. And it also looks like they're going to eliminate the need to cross public roads. And of course, there's risk involved there. You got to stop the truck and make sure it's a clear crossing, etc. Evidently, they were restricted to daylight operations, probably because of the public road crossings. And so anyway, this crosscut drift will increase the efficiency of mining at this location. Let's see, there's an aerial view town site. So that's the town of Red Lake, waste facility, crusher. Yeah, so aerial view. And you can go to their website. You can skim through all this stuff on your own. Let's see, I had highlights in here. I'm not sure why we're not seeing them, but we've talked about this definition drilling. Oh, well, the key point or what caught my attention with this particular slide is this: mining is risk mitigation. That's how you make money, or one of the ways you increase the money you can make from mining precious metals is by de-risking the operation. And that's the point they're making in this slide. They talk about the different ways or the different types of risk, and then their approach to mitigating those risks. The tight-spaced definition drilling, we talked about that. They picked it up cheap, 10 cents on the dollar, 12 cents on the dollar. Recent production, implementing fixes. So again, they're learning from past mistakes and fixing those mistakes. They're actively working it now. All permits in place and in good standing. They've got the groundwater situation under control. They've added dewatering capacity because they plan to go deeper into the mine. They're currently at almost 1,300 meters, but based on what their neighbors are doing and some of their deep drilling, They know that there's potential for high grade ore all the way down to 3,000 meters. So dewatering is important. Based on that, you'd think that they're into this for at least 70 million at this point. But no debt. They didn't use debt to get that. Good understanding of the geotechnical setup. So they've got a what is it, NI 1043, I believe it is. Anyway, they've got recent technical reports on both the Madsen mine, which again, that's where the processing plant and mill is. And then they also have a recent technical report on the nearby property, which is Rowan. And so excuse me, I find that that's another positive. The fact that not only do they have drill results to show, they're far enough along in the process that they have technical reports. So, and again, this is an emerging producer, second half of 2025. So, and this is the slide I alluded to earlier. So they're showing, West Red Lake. This is its current valuation. If it were a junior producer, I call them emerging producers, that would be the valuation. So, not 3 times the current valuation, but more than double. And so based on that perspective, WRLG is currently significantly undervalued. That would be one way of looking at this, that currently undervalued based on everything they have going on. Let's keep going here. Oh, I forgot to start my timer. There's the management team. Capital structure. So issued and outstanding, we're at 270 million shares. Fully diluted is 395 million. And when I saw that, I kind of like, oh man, I wish they didn't have that many shares outstanding. But again, current market cap, I think this number is a little bit low. If we go back to my slide deck, this is what I can, if we used the 395 million shares fully diluted, outstanding and diluted, we'd come up with a market cap of 308 million Canadian. And that's based on Friday's closing price of, I believe it's 78 cents Canadian. So that's where I would say the market cap is. And if you remember from my video on Dolly Varden, when I'm looking at a junior explorer, when they get to 300 million, they're fully valued. At that point, I want to see, hey, we're moving into production. We got, Fred down the road's going to buy us out. There's some plan for what happens next at the $300 million threshold. Well, second half of 2025, this company is going to be in production. And so, although I wish they didn't have that many shares outstanding, fully diluted shares again, they're an emerging producer and a near-term emerging producer. So I'm more okay with that many shares outstanding than I would be otherwise. Based on their presentation and this is based on shares issued and outstanding. So if we look at the 270 million shares and Friday's closing price, 78 cents Canadian, we'd get this 211 million market cap. They're saying 185 million, which, obviously that's based on issued and outstanding, not fully diluted. The prices of they've got warrants out, they've got options out. They are mostly at the current price, I think I saw some of them are at like 62 cents maybe. So actually under the current value. And so obviously those, whether they're warrants or options, they'll get exercised ultimately. And then some of the latest shares or their units, because they were a share of stock plus a warrant. And the warrant, I believe, they're at $1 Canadian. And so almost certainly within 24 months of issue date. So dollar Canadian within 24 months of issuance, almost certainly those warrants will get exercised as well, which would take us to the 395 fully diluted shares. This is just this is their news page on their website, and I highlighted some of the highlights. How's that? I highlighted highlights. So recent drill results. This is September 10, 54 grams per ton over 4 meters. And remember the rule of thumb that I learned this from Quentin Henney. Economic geologist is how he describes himself. You take the grams per ton and you multiply it by the width of that drill result. And so in this case, we multiply 54 times 4, which gives us 216. And that number we can use as a rule of thumb as to whether a particular hole is economic or not. And the cutoff, according to Quentin, is 100. And so here we got 216. So clearly that's high grade. That's a juicy drill hole. 23.7 times 3.5, it's nearly 100. So, another good hole. Let's see. Oh, and here, this I found interesting. Gold-linked notes and warrants. And so these aren't available to U.S. investors, I believe. They're only Canadian investors have ability to obtain these. Because they're so close to production, they're able to obtain financing, based on future production. And so these notes paying 12% interest, which, that's good interest rate currently. If you buy 30-day US Treasuries, I think you're getting, it was 5% for a while. Interest rates have dropped, you probably 4%. So anyway, 12% return is pretty good. Based on, these notes and warrants are based on a gold price of $1,800 per ounce, which, we're currently pushing 2,600. So 1,800 is a conservative valuation. And also in their technical report for indicated and inferred resources, they're using a cutoff of $1,800 an ounce gold. And I believe like 3.5 grams per ton as the cutoff grade. I could be mistaken on that. We'll see, I believe, here in a bit. 107 times 2.5, that's 214, that's all, 250 plus. That's a juicy hole. 106 times 2.3, that's a juicy hole. 134, that's a good hole. This is fun. So as they're going through and cleaning up the mill, and again, past producer here, they were able to pour their first gold bar, and we'll see. We'll look at a news release. We'll see that gold bar. It's ugly as sin, but how exciting is that? To pour your first gold bar at the mill and refinery that's picked up on the cheap. So another nice hole. 16 times 8, 6 times 17. So lots of high grade drill results. And as we'll see, we'll look at in a couple of these news releases, shallow. So they're getting high grade at 33 meters, I think it is. So basically 100 feet, which, the shallower, the better. Cost less to mine at shallow depths. You get down to 3,000 meters, that's 9,000 feet. That's what's mile and three quarters. You're pretty deep into the earth. That's a long way to drive a diesel powered truck down into a mine to recover ore. So anyway, finding high grade ore at 100 feet, that's a good thing. There was, shares issued uh, in this. So their initial, they went in with an initial cleanup of the mill, the processing plant, and got 750. No, I'm wrong there. The value, they sold the gold that they cleaned up and got 750K Canadian, $750,000 Canadian. I think it was like 400 ounces, 400 of ounces of gold that they recovered from cleaning up the processing plant. And that's a good indication to me that the previous operator, they didn't have their process dialed in fully. That the fact that West Red Lake was able to go in and clean up 400 ounces of gold um, indicates that the previous operator could have been doing better. More gold link notes, another juicy, what's that, 125 plus gold link notes. So lots of good news. Oh, and another point I wanted to make on this, as far as investing in mining stocks, whether they're silver or gold, you ideally want to see regular news results because investors get bored quickly. It's what have you done for me lately? And so you want to see a company making regular news releases, and when they can release good news like high grade drill results, that's even better. But this company appears to be making regular news releases, and in my mind, that's a good thing. This is the drill results at shallow depth. So 32 meters to 36, that's the 216 we were talking about. Again, shallow, talking about the previous operator only operating down at level 9. They're planning to go deeper. They're dewatering. Let's see, I think that was it in this news result. Yep. Let's keep going. Fact sheet, again, you can find this on the website. We talked about that. 800-ton mill, nearby Rowan. This is an aerial picture of the Rowan property, which again, it's a collection of 3 past producing mines. What I got from looking at the technical report on Rowan is that's where West Red Lake gold is focused initially, but evidently this is the best opportunity for expanding resources. And again, they've currently got 195,000 ounces indicated at Rowan and high grade. That's definitely valuable ore, worthwhile processing that ore. Oh, and here's the technical report in 2024. So that's this year. That's just a couple of months ago. That's for Madsen. And then Rowan it was 2023, I believe, and then updated. Looks like it got updated in 2024. There's the $1,800 an ounce for the technical reports. Do we see a cut? Yeah, and there's the cutoff grade, 3.8 grams per ton. So 3.8 grams per ton cutoff here on the Rowan looks like 3.38 grams per ton on Madsen. So a little bit different, but not much. Let's see, this is management discussion and analysis. I'm sure I'm running longer than I'd wanted to, but I'm going to keep going. Gold link notes, 12%. Company will place gold in escrow quarterly basis. That's how they will pay these notes off. Let's see. Big boys operating in the neighborhood, Barrick, Ken Ross, Evolution, Madsen Mine. Oh, this is the past producer. Looks like they were able to produce 2.5 million ounces. Major infrastructure, we've got paved highways, fresh water, hydroelectric power. I hadn't mentioned that. That's a good thing, in our current environment of inflation, everything is costing more. Diesel fuel, whether it's diesel fuel or coal for a power plant, the cost of that is going up. Hydroelectric power is, I can't say that it's cheap, but it's less sensitive to inflation than other types of energy. And so having a hydroelectric power source from the grid is a very positive thing in my mind. Processing plant, tailings facility, portals and ramps, shaft, just a lot going on for this company. Technical report, recent. Let's see, anything. They've completed 38,000 meters of drilling in this year. This is the new crosscut access that they're working on, 3,200 meters. What is that? 9,000 feet, not quite 2 miles, 1.75 miles. So it's connecting the east and west declines. The portal, evidently, the portal on the Madsen mine, the I forget whether that's east or west, but whichever one it is, it's smaller in diameter, so they can only fit. I forget if it's 30 ton trucks. I think it's 30-ton trucks. The portal on the other access is larger than that, so they'll be able to get 60-ton trucks, which obviously that increases your efficiency. The bigger, the better when it comes to hauling trucks. So that's what they're getting into there. This is, mining is an expensive operation. And so as they are ramping up to production, they're bringing more people on board, operating staff. They're doing work underground. They're doing work in the processing facility. They're paying people to build the on-site living quarters, et cetera. So, all of that cost money. And so it looks like this is just compensation, salaries, benefits, director fees, $1 million in the quarter. So $4 million a year in payout just for staff. So, but again, they're headed into production. I think that was all I had in here. Yes. And based on the timing, let's talk about second half of 2025. It looks like gold, the metal gold has just broken out from the $2,500 range and pushing higher. So good timing to go into production in an environment of rising gold prices. And so anyway, here's another map. Here's the Madsen mine. That's the processing plant. That's the nearby property. We've looked at that. 100% held. Excuse me. That's these three past producing mines. 100% ownership of that. There are some royalties on some of these land holdings. There's some royalties I believe most of the royalties have buyout provisions. And so in the right environment, it will make sense for West Red Lake Gold to buy out those royalties. I did notice there's at least one of the royalties that does not currently have a buyout, but uh, I'm going to call it a game because I can't think of another name for it. One of the games that a company might play, and I'm not implying that West Red Lake Gold will do this, but if a royalty holder is being difficult, you just say, well, okay, we won't develop that property and you can hold it forever. But that's just me. I'm a Texan. I tend to be not headed. So let's see. This is just historic stuff. Significant value. The cleanup. Here they're talking about the cleanup. Yeah, so 415 ounces of gold, 750K from selling that gold. Oh, and based on this initial cleanup, they decided to do a second round of cleanup. If you ever thought that processing gold was clean process and you weren't going to get your hands dirty, well, wrong. So this is some of the mill cleanup materials that they got. Let's see anything else there. What do we got here? This is, yeah, $33 million shares and warrants. And so this was insight into the warrants. Oh, and then charity flow-through units. I had to go look and see what the heck is a charity flow-through unit. Canadian tax law, actually, I've got it here in this slide. So Canadian tax laws allows some of the expenses from a resource company to pass through to individual investors. Typically we're probably talking about high net worth investors like Eric Sprott. But it gives them a tax benefit by investing in these charity flow-through units. And notice that the flow-through units are priced higher than the standard units. And so you pay a little bit of a premium, but you get the tax benefits. And so if you're an investor who needs tax benefits, this might be one way of going about it. So found that interesting. One common share and one share for warrant. So a unit, each of these units is one share, one warrant. Warrants are good for 24 months at a price of $1 Canadian. And so we'll look at the charts. We're getting there. We'll look at the charts. Almost certainly in an environment of rising gold and going into production, they will hit that price point within 24 months. So those warrants will almost certainly be exercised. Let's see, this is pours their first gold bar. And again, this is the CEO. There's a picture of the gold bar, ugly as sin, but how exciting is that? That our first gold bar, that's good stuff. And again, here they're talking about they're learning from the past operators' mistakes. I mean, that's how they were able to pour their first gold bar, is by cleaning up the mill. So anyway, that's interesting stuff. There they are. That's on site. They were able to smelt and pour. There's a close up of the gold bar. It's from the aesthetic perspective, that gold bar is ugly as sin. But imagine being involved in this mining operation, and that there's your baby. That's your first baby. So kind of cool. That's up there. Let's see, what are we talking about here? Mill restart. Restart second half 2025. Let's see. Started with one rig. They added a second rig in April. They're doing a lot of they're able to do a lot of their drilling from underground. Because remember, this is a existing mine. They've got a shaft down to almost 1,300 feet, meters. Now I'm confused. But anyway, they're able to drill from underground. It must be 1,300 meters. It's got to be 1,300 meters. Yeah. We'll see a map here, I believe. Oh no, we're on our last slide. So tailings plant or tailings dam is in place. They're raising the height of that dam by 4 meters. That's going to give them 10 years of operation based on 800 tons. So if they go and double the capacity of the mill, that would cut the tailing capacity in half. So anyway, 60% of the work done on the tailings dam, connecting the east and west mines to increase efficiency. I didn't look into this. The 10 million via Canadian Development Expense Flow-Through Funds. I believe that this Canadian development, the Canadian government recognizes the value of mineral mining, mineral production within the country, and so they support and help the miners do their thing, so to speak. And so I'm guessing that that's $10 million basically from the Canadian government. Let's see if we can tell quickly. That looks like the same. Well, let's not spend any time on that. So now we're on the charts. This is daily time frame. This is over the counter. So we're looking at the stock in US dollar terms. Just some highlights here. Notice that this is essentially a breakout. That was Friday, broke above this support resistance zone. Right overhead is resistance at the median line, excuse me, of this Andrews pitchfork. So immediate resistance overhead. Full disclosure, I do not have a position in this company. I will probably put a bid in Monday, but I'm not going to chase this stock. And I don't give financial recommendations. I'm not recommending that anyone invest in this stock. I'm simply sharing information. I'm doing my own due diligence and deciding if I want to invest in this company. I'm sharing the information with you to help you do your own due diligence. My strategy will be, if I decide to, would be to put a bid on this company Monday, not chase it, with the assumption that it's going to run into resistance and pull back. And if we were playing a breakout trade, again, that looks like a breakout to me. Very common that a vehicle, whatever it is, stock, gold, whatever we're looking at, breakout, and then it pulls back to test the breakout level. And so, if I bid Monday, I'll probably bid, at the low end of like 56 cents, somewhere in there. Well, it's only at 57, it's basically a penny stock. So buying at 58 or 56 doesn't make a big deal, but I'm not going to chase this stock. And we may see it pop some Monday because, again, Bob mentioned it in a video. I'm talking about it in this video. Now, I don't have an audience. I don't have much of an audience at all, certainly not in comparison to Bob. So me making this video is not going to make much difference Monday morning. Let's look at the indicators. Accumulation distribution, not sure what happened back here without digging into it. Basically steady downhill. So people have not been holding on to shares, or the companies companies involved in bringing the shares to market may be selling, maybe paying themselves by selling the shares that they were granted for doing their job, underwriting the stock, basically. So that may be what we're seeing there. MACD in bull mode. Looks like it's on a buy signal. Let's expand that. Yeah, so bull mode on a buy signal. Long way to run up to this previous high, where that's where we might think about this stock being overbought based on MACD. But we've got a long ways to run before that occurs. High energy based on the stochastics indicator. Let's take a quick look at volume and the moving averages. So actually currently in bearish alignment based on the moving averages. Well, mostly bearish. 50 is below the 200, 20 is below the 200, but about to rise above there. Big pop in volume on both Thursday and Friday. That's good to see. Let's look at same stock. This is on the Canadian market. So now we're looking at Canadian dollars. And again, Friday's close was at 78. Not much different here. I think the accumulation distribution looked a little bit different here. Like investors are accumulating shares on the Canadian market more so than the U.S. markets. So. And again, Bob mentioned this stock in an interview that he did on the 10th. And if we back out a little bit, we can see that low volume. There wasn't much going on in the company, so not much volume if we go back in time. But volume, interest in the company, activity in the stock market's increasing as we go forward. We see that in the volume. Bunch of volume there, volume on Thursday and Friday. That's good to see. And again, a point I would make, it's more obvious on this chart, running into resistance on Friday, both at the median line of this Andrews pitchfork and at the this price channel, at the top of this price channel. So we may see a pop Monday. We may see a pullback to test the breakout zone. So anyway, that's all I've got for you in this video. Hopefully I've provided some value, and I look forward to talking to you soon. Bye-bye, folks. Let's see, how do I, there we go.